Hi, my name is Stan Voelkel. With Voelkel Commercial Advisors. We're a commercial real estate firm specializing in working with small businesses. And I have today on the interwebs Scott Actkinson, who is a client of mine. And Scott's specialty is small business loan packaging. And he's an expert in the area. And so I thought it'd be really helpful to have someone like him to talk to us a little bit about the CARES Act, which I think most people have a pretty good idea of, or they're getting a lot of good information out there as to what's going on with that. But I want to talk him to talk about that a little bit, and then want him to talk a little bit more specifically about what the SBA is doing with regard to loans, because I think that's an area that once you get beyond kind of this payroll protection program, I think more companies are probably going to be looking to a little bit longer term solution with regard to SBA loans. So with that said, Scott, will you just give us a little bit of background about yourself and tell us what it is that you do?
I'm Scott Actkinson. I work with a company, Statesman Business Advisors. I've been preparing SBA loan packages now for, I'm going on my 32nd year. So this is a very popular, SBA is a very popular program right now, just because of the what's going on with the coronavirus, and companies need a lot of help out there. And we've seen layoffs, we've seen reductions in salaries. And so the SBA has come out with some programs to help cure those situations.
And that's great. Thanks for saying that. I think it's great that say what you want about the government either being involved or not being involved. The government's always been promoting small businesses, which obviously is the backbone of the United States economy. So, which, I think them helping out in this situation, probably a good idea. Let's talk a little bit about the CARES Act, and that was just recently signed into law. So let's talk a little bit about that, and then we'll move on into the more of the traditional SBA disaster loan type topic.
Yes, the CARES Act was finally signed by President Trump. I believe it was last Friday, so it was a week ago. And so what we've seen then is, I believe the Treasury and the SBA were given 15 days to get it implemented. Well, we've just now this morning gotten the final, the Treasury sent the final instructions to the SBA, and the SBA is starting to send out their final forms. So the rollout will be today on that particular program. That's a program where you can potentially get up to $10 million. There's an element of debt forgiveness to it. The small business is required to submit payroll information to the bank for their payroll costs based upon calendar 2019. So you basically calculate your average monthly payroll for last year, excluding anybody that makes over $100,000. You divide it by 12 and you multiply it by 2.5. And that, in most instances, is going to be the loan amount that most businesses are able to borrow. The cap is at $10 million. The cap's at $10 million on that. Now, what can you include what's the definition of payroll costs? Well, it's gross wages, it's state unemployment tax, it's health insurance premiums, it's medical leave, vacation pay, and retirement benefits. Those are the big ones that can be included in the computation.
So when you say small business, what define? I'm sure the government has a definition. They have definitions. What's a small business?
Great question. They're trying to really help out the hospitality industry. So if you're a restaurant or a hotel, basically you have a little bit more flexibility, but the basic guideline is 500 employees. For 500 employees for not only the business itself, but any affiliate entities controlled by the business owners, by your business owners.
Yeah. So for example, if you were a restaurant and you had a bunch of smaller companies under a bigger company, that would be kind of included as part of the number.
Correct. Right, but they're giving lots, Stan. They're giving lots of leeway. They're giving lots of leeway to restaurants. They're giving lots of leeway to restaurants.
Mm-hmm. But really, any small business would be available to get the loan, correct?
Yeah, yes. I mean, there's some exclusions. I mean, you have to have, you have to be, basically you have to be either be a U.S. citizen or a U.S. resident. You, you know, you can't be you can't really have any problems with the law. And like I said, we have to also meet the size standard test of 500 employees. Those are the big ones.
Yeah. So, and this is with regard to the CARES Act. Is there any type of personal guarantee or any collateral that's needed as part of getting a loan?
No, that's why there's so much interest in this program. There's no personal guarantees. There's no collateral, and the SBA has also relaxed the what they call the credit elsewhere rule. They're not really looking at credit elsewhere on this particular loan program. Credit elsewhere basically means that if the business or the owners of the business have other personal resources or other, say you're working with a business that has a lot of liquidity, the SBA is not even looking at that. Usually on a regular SBA loan, they look at that because if they feel like somebody has the means to do it without them, then they don't want to, the SBA is not going to jump in there and put a guarantee on something if the borrower has either business means or personal means to have that liquidity.
Right. And so what is the actual, is there a term for the loan as in a number of years? And then is there an interest rate associated with the loan?
The SBA is putting a 2-year, the loan is supposed to be paid back in 2 years. The first 6 months, there's no principal and interest payments.
Okay. So that's deferred.
That's deferred. Then it's a 2-year note. The interest rate is going to be 1%. Now, there's also a payroll forgiveness portion. You're going to have to go in after you're supposed to. So let's talk a little bit about what the proceeds can be used for. The proceeds can be used for payroll costs. Like I said, payroll costs is going to include the retirement and the state unemployment tax, that's what we did the calculation on to determine the loan amount. So you can use the money, obviously you can use the money for that, but you can also use it for rent and utilities, but it has to be during the period, it has to be during what they say is the covered period of the loan. It has to be February 15th, 2020 through June 30th, 2020.
Right.
So you have to expend it for that. If you can't use it for that, then you're not supposed to use it for any other purpose. And
okay.
So at that point, those are the proceeds that would either be put on a payout or in all likelihood, if you were sitting on a lot of cash if the business had turned around by June 30th and you were starting to get cash flow in, there's some chance that you'd be able to take that cash and just use it to pay down the note to reduce the amount that would be put on the 2-year note and start to amortize.
Yeah. So one of the things that I've been hearing kind of out there is the possibility of loan forgiveness on, I don't know if it's this specific within the CARES Act with the PPP or if it's other parts of the program.
Yeah. After June 30th, the borrowers are going to go back to the bank and let the bank know this is what I used the proceeds for. And as long as you use the proceeds for those purposes from like February, well, we're past February 5th, it's the 3rd. So in all likelihood, these loans aren't going to be dispersed till middle of April till May 1, we're talking about. I mean, the loan applications are going to probably start flowing to the SBA this weekend and even Monday.
Yeah.
But the proceeds aren't going to be dispersed by the bank to the borrower probably till obviously later this month or in early May, because it's not like you get your loan approved and go down and get your money the next day from the bank. It doesn't work that way.
Yeah. So there's a little bit of a timing issue. Well, not issue, but there's a bit of a time from the time you're approved to the time that you actually get the money.
Correct. They also do a calculation though. If you've laid people off or reduced the salary of individuals, look at the period after the disbursement of the loan, which like I said, is going to be May 1, and you go out 8 weeks and they actually look at what you've done with your payroll. Have you laid people off? Have you reduced the salary? On a pro rata basis, they compare that back to 2019. I believe February 15th 2019 through June 30th, 2019, or at the discretion of the borrower. The other period they can compare that to would be January 1, 2020 to February 29th, 2020. You do a calculation, and if you've reduced your payroll by number of payroll, or if you reduce the salary of any individuals by more than 25%, then you have to take a haircut on the amount of your debt forgiveness.
Yeah, gotcha.
With the important caveat, this is very important, that if you cure it, say you start off on May 1, that's when the clock runs for your 8 weeks. But if you cure the reduction in payroll or the salary reduction, either of those two, if you cure them by the end of the 8-week period, then the SBA says, okay, you're okay. You don't have to haircut your debt forgiveness. They make an allowance for those companies that have already started laying people off or reducing the salary of people now. They make an allowance for that and say, okay, well, if you get this loan, you should be able to start hiring people back, and you should be able to bring people back to the salary that they were last year. So they're saying in those situations, we'll give you total debt forgiveness.
Yeah, that's good to know. That's good to know. So what are some of the things as people are, so first of all, you do need to go through a bank, correct? Like an SBA approved lender to get this PPP loan?
Well, no, yes, you do need to go through a bank, but every bank is going to be allowed to do these loans.
Okay.
So some banks out there have what's called delegated authority with the SBA, and some have non-delegated authority. The difference being delegated authority is for those banks that have demonstrated their expertise on the program and can act as an agent of the SBA. That's on a typical SBA loan. That's kind of what happens. On a typical SBA loan, if you're what's called a preferred lender, you send minimal information to the SBA and get an approval, but you're subject to audit by the SBA.
Yeah.
Having that, it's kind of like having a franchise. It's kind of like you have the special right to do it this way. But there are banks out there that haven't done many SBA loans historically, so they actually have to send their homework to the SBA for review. Those are called non-delegated lenders. But for this particular PPP program, the SBA has granted delegated authority to all lenders. So there's just minimal information that's going to be sent to the SBA on these deals.
Right.
But all banks are on the same footing on this program.
So one question I have with regard to that, does it make sense to actually go to a preferred lender? Because it seems to me like if you don't fill out the government, we've all dealt with the government before. If you don't fill the form out correctly, that the government say, may deny, in which case you have to go back to the back of the line and it delays the whole process. Is that true? Does it help to use a preferred SBA lender versus not?
Stan, it probably does, but a lot of these applications, I think a lot of the banks are going to take them online. A lot of this information is going to be submitted by the borrower, and the banks are going to set up portals and just take the information that way. I tell the borrowers to do as much work for the bank as they possibly can. Yeah. The borrowers actually have to in my opinion, the borrowers should actually do the calculation for the loan amount, and and provide supporting documentation behind it, like 941 payroll tax returns, 940 payroll tax return, state unemployment taxes.
Right.
Just support every number in the calculation and send that to the bank, and let the bank put your loan calculation on an Excel spreadsheet, and then put your numbers on there and support every number in your calculation and send that to the bank.
Right. And not that you can't gather your own information. Obviously, a lot of people have that capability. But what I've seen quite a bit lately is CPA firms are doing a lot of webinars about just the whole process and what needs to be done. So maybe it'd be a good idea to reach out to your CPA, your financial advisor, anyone that's going to have access to that information that can help you compile and get it to the right people at the SBA, correct?
I think, yes, I think that's correctly. And you also asked me about, should you do business with a preferred? I don't think you necessarily have to do business with a preferred lender. I think you should, I think borrowers should go to their bank. Yeah. Because their bank actually knows them. They have their business accounts there. Their
Yeah.
bank have all the know your customer. They've already done all the know your customer for
Yeah.
the particular borrower. So I just think to the extent that you can work with your bank, you need to do that. And so
Gotcha.
the first step is to go to your bank.
Gotcha. Okay, perfect. So let's switch gears just a little bit, and we'll hopefully wrap this up shortly. But talk about some of the economic. And so we've been talking about the PPP, which is under the CARES Act. But then let's talk about is it the EIDL?
Yeah, Economic Injury Disaster Loan Program. Let me say one other thing about PPP before we move on to that. There's no fees with the PPP program. There's no fees to the borrower.
Okay.
It's 100% guarantee to the bank by the SBA.
Right.
And there's no fees to the borrower. The banks are getting fees from the SBA to do these loans.
Okay.
So it's a very good situation for the borrower. And like I said, as long as they can support the calculation of debt forgiveness, then what it really turns into is a grant.
Yeah,
Really
which
grant.
is great. I mean,
Yeah.
Tell me people aren't going to be happy about that. So, and we'll talk about this at the very end, but the SBA has got a very good website, sba.gov, which can provide a ton of information. A lot of it we've talked about, some we haven't, but that's also a good resource. So let's go to the economic disaster loan.
Okay.
Real
So
quickly.
that's actually, we do have to switch gears on that because on the PPP program, there's a bank involved. On the Economic Injury Disaster Loan Program, it's the government and the borrower. There is no bank. It's a direct loan program.
Okay.
And the government's taking applications for that particular program on it's what's on the SBA website, but it's www.sba.gov/disaster.
Okay.
So they started taking applications in that program probably about 2.5 weeks ago. But earlier this week, they actually changed the application. They have what's called a streamlined application. And I was out there the other day, and I thought it was extremely easy. I mean, I think Stan, I don't know whether you've looked at it, but it's just to me, it's a very easy application, and I think a borrower can probably complete it in 30 minutes or less.
Okay.
That's a program. There's a $2 million max on that program. It's information. It's a loan between the borrower and the SBA, and so you have to upload your information to the SBA. And there's actually a loan officer at the SBA that reviews it and says, "Okay, we've looked at your information. We checked your personal credit. And we believe that you're eligible for a disaster loan of $500,000. And based upon the information you're providing us, you can pay it back to us over 15 years. You're eligible for up to a 30-year note on that particular program.
Yeah.
But that program, the use of proceeds is a little bit more flexible than the PPP program. You can use money for, you can use money for inventory. You can use money for payroll. You can use money for working capital. So the use of proceeds is broader. And let me also mention that you can't, with all the interest in both programs right now, you cannot get a loan. You cannot get both a PPP loan and an economic injury disaster loan for the same use of proceeds. That's
a good point.
A lot of people are going in and getting a PPP loan, because remember, that's just for payroll costs. That's payroll, utilities, and rent is the only thing that loan can be used for. A lot of people are going in for both loans. You just can't use them for the same purpose. And like I said, there's a broader use of proceeds on the economic injury disaster loan program.
Right. So on the economic injury disaster loan program, are the qualifications kind of the same as far as, or the information that you need to provide? Is it collateralized?
It's collateralized. Yes, it's collateralized. There is a personal guarantee, and the SBA also does consider credit elsewhere. So if you were a very liquid person, 20% or more owners of the business have to personally guarantee. So if you have considerable liquidity, the SBA would look at you and say, look, we've determined that your need here is only $300,000, and you're sitting with $2 million liquid securities on your personal financial statement. Now, everybody needs to mark, you know, with the downturn in the market,
Yeah.
everybody certainly needs to mark their securities to market right now,
Yep.
because they're worth probably 30 or 40%, 30% less than what they were 3 or 4 weeks ago. So everybody needs to mark their, before they submit their application, which is going to include a personal financial statement and some business information. So the information collected on this particular loan program is going to be broader. It's going to be like they're underwriting they're underwriting the business more than they certainly are on the PPP program.
And this is going to take a long, I assume it's going to take obviously more information to qualify, and probably maybe a longer period of time in which to get your funds from the SBA, correct?
I would say probably, you know, if you submitted an application today under it, the acronym on this program is EIDL. If you submitted an application today, you probably would, you can check your status. They're probably not going to even have it logged in for, you know, maybe 7 to 10 days. And then you can check your status afterwards online. But I'm saying your, you know, ultimate approval is probably 4 weeks out, and then maybe get your money in 6 weeks. Although they do, there's this new part of the EIDL that's come out. Well, within 3 days they'll give you $10,000. They'll give you $10,000. And that's money you get to keep. And that's also money that I believe that comes off the balance of the. You know, that would come off the balance of the request. If the SBA says that you're eligible for $300,000, well, then when the actual loan portion comes out, it would be $290,000.
Gotcha.
In other words, you do not have to pay back the $10,000. You do not have to pay back the $10,000.
Yeah, I'm sure small businesses will like that.
So two things I would point out. Under the PPP program, you're largely submitting payroll information to the bank, and then the bank's going to retain that information and submit forms to the SBA for approval. On the EIDL loan program, you're going to be submitting business and personal financial statement, because again, you're taking personal guarantees. You are also under the EIDL program taking the best available position in collateral. That loan is collateralized where the PPP loan is not collateralized.
Gotcha. Okay, well, I think we've pretty well covered everything we wanted to cover. First of all, I appreciate your time, Scott. I know you're quite knowledgeable when it comes to the SBA. I know, like you said, you've been doing it for 30 plus years. And once again, I just really wanted to get some, you know, there's a lot of information out there. I just wanted people to get a little bit more information. There are a lot of resources out there. Just go on the web, and you can find tons of things. SBA.gov obviously is a good place to start. I will include your information, your personal information, your contact information, not your personal information. I don't actually know that, but your information in the notes. And anyways, I appreciate your time, and hope you have a great weekend.
Stan, thanks for having me. And it's not, and for the potential borrowers out there, it's not too late to start, but I would start with your bank.
Yeah, perfect. All right. Thanks, Scott. Have a great weekend.
Stay safe.
All right.
And healthy. Bye-bye.
Yeah. Thank you. Bye.
Bye.